points on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, welcome to the watch list. You picked a good one to watch today because I'm telling you, tomorrow is the main event with Powell. There is huge expectations, and what I'm gonna go over today, well, I think you're going to want to listen to it. So, I got a nice little breakdown of what to expect. I have a theory depending on how things play out, but I'm telling you right now, nobody knows what is going on, and Wall Street is tripping. So, I'm going to tell you, like the video, drop your thumbs up, make sure you're subscribed, make sure we see you on stream. Powell Days, go crazy, baby. YouTube.com/TheStackMarket. I'm going to see you there tomorrow, but before I get into any of it, I just need to show you this, and I need to get you on the same page because I'm telling you, Wall Street is tripping out. You guys ever see that meme where someone's like, oh, I'm selling, the market's too high, and then the next person says, high, buy, 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 then it ends up turning buy, then someone says, oh, I'm going to buy, this isn't a good time to sell, and then eventually everyone starts saying sell, sell, sell. That's pretty much what we have happening right now. So let me show you this. Here's a couple of headlines. You've probably seen it, but this is the quote I want you to see. Most Wall Street firms and markets now see a 75 basis point hike. They're saying most of everybody's expecting it. Everyone's saying this is priced in, right? So let's just take a look at the Fed futures. This is how they ended up today. Are the Fed futures pricing in a 75 basis point hike for tomorrow? Yes, they are. And this is going to come into the thesis I'm going to share with you. But now take a look at what it says on previous week probability. It was a 3% probability last week, less than 7 days ago. And now all of a sudden, most of Wall Street expects it. Here's another one. If you've been following Powell like we have, they said, or Powell said last month that the Fed was not actively considering a 75 basis point move while not ruling out if conditions change. But the Fed chair laid out a baseline of 50 basis points in June and July, but he did hedge himself by saying that that hinged on the economy evolving as officials expected. Yes, inflation did go a little bit higher than what it was, and it was a big surpriser, but you gotta ask yourself, is this really what most of Wall Street was expecting from literally Friday till today? And then all of a sudden you hear from Bill Ackman, the Wall Street Journal, and then a couple of big banks, but it's a very interesting dynamic, and this is why I'm saying this video is important. What is going to happen is important because I don't think a lot of people are recognizing the gravity of the situation, and just the fact of the matter is, Powell and whatever he says tomorrow, it could have a lot of implications, and there's just a lot of powder loaded into this event. So keep that in mind. That is the first part, but now let us get into the keys, and now let's talk about what is going to happen tomorrow and what the big deal is. If you're not on the main page already, here is the quick rundown. Friday, inflation came way above expected, or at least it did not top out, meaning it keeps trending upwards. People started freaking out. We knew Powell was going to raise half a basis point. We were already waiting till June 16th to see the actual, balance sheet reduction, but then all of a sudden, ever since the Friday CPI, everybody started freaking out. The currencies were going crazy. The dollar got strong. And then now this debate about whether or not Powell is going to have to increase the rate hikes more than what he signaled and how they're going to go about combating this, that has been the big issue. The real big issue is is Powell going to raise by 75 basis points tomorrow? Is he going to stick with 50? But here's the thing you got to realize. If he goes above the plan, that changes every single part of the curve that the Fed or the Fed futures have already been pricing in. So now that we got that out the way, let's go to the keys, and we're going to talk about the bond market, but let's start with this. This is why tomorrow is so important. Pretty much everyone's talking about the rates need to go high. Bill Ackman today said they need to go to 1%, but think about this right here. It has taken the Fed 3 years to go from 0 to where the rates will be at tomorrow if they do 3/4 of a point hike. Pretty much in 2015 till 2018, it took that time period to go from 0 to 1.5 to 1.7. So think about that for a second, because a lot of people are saying this needs to happen, but it's like, That's not how it's happened. So that's where I'm starting. But now here's the big thesis and what I am expecting tomorrow. Again, this will remind you of the TLT from 2019. Do I feel as confident? No. I think there's just way too much going on. It's not as clear cut. And really, with all these emotions and everything going back and forth and people kind of clinging to weird ideas, I'm a little skeptical, but this is how I'm feeling, essentially, or at least what I see as the most important thing, and it is the Fed futures. This right here, we've been bringing it up and saying if it goes above 60%, that's the key. Why? Because over the last 50 years, the Fed has followed the Fed futures. Pretty much, if it is pricing more than 60%, they have gone ahead and done what that action represented, because if they didn't, it would lead to a market surprise. So keep this in mind right now, because literally, it is showing almost 100% probability that the Fed will be raising by 3/4 tomorrow. But if that doesn't happen, they will be breaking the trend, and it would actually be a market upset or a market surprise. That's the first part. But now let's look when the Fed actually did a 3/4 of a basis point hike. Last time they did a double was in 1994. Remember, I made a video showing you guys that, but a triple rate hike, well, we got to go back down to the 80s. And the funny part about this one, you can see from June 1984 to August, they did a 3/4 rate hike. Again, up until or after that, you never saw it again. But leading into that, they did a 0.5 point hike. And then look at the month before, that was 1%. And then the month before that, or about 2 years before that, they went from 8.5 to 9.63 and then went a little bit lower. But they were raising 100 basis points. So this would open the door to a new realm of history that we haven't seen. But literally, just like the TLT from 2019, tomorrow will be the first time in 50 years that the Fed will break the Fed funds history and upset the market, or two, it will be the first time in 40 years in which we have seen a 75 basis point hike. So that's what you got to keep in mind. This is why I'm freaking out about all this. I'm not even freaking out. I am excited. I am peaceful. God bless you, Cole. We got everything we need. Amen. But what I'm trying to say, it's going to be historic. We've talked about spreads and events. Ladies and gentlemen, this is an event, and you really haven't seen this in almost half a century. So keep all of that in mind. But that's where we're going to start. And now this is what I want to talk about, and kind of part of the theory. Other people have brought this up as well too, but pretty much no matter what happens, the bond yields need to go higher from here. If inflation is going to be runaway, if we're going to deal with more problems, and the Fed is going to stay steadfast to either 0.5 basis point or they're going to respond at the whim to 3/4, the bond market has to break. That's it. The bond yields have to go higher. The only way to break inflation is to break the bond market, and that's what you've been seeing. A lot of people are saying, wow, this is the biggest move since 08, 2010, but literally the 10 years at the level of 2011 right now. You know, people are talking about all of this, but bond market is already getting clapped, and this is showing the evidence. The only way we're going to get rid of inflation and break this crazy inflation, the bond market must break, and that means yields from high yield credit, junk, investment grade, down to the treasuries, short and long term, they're probably going to all get blown out. So let's see what happens with it, but keep that in mind, because this is now the base theory that I have coming into tomorrow. So I said this in 2019. I'm going to open the door to a lot of you. Let me know if you challenge this. Let me know if you have a disagreement. Please keep it positive and respectful. And I'm saying this because I want to find any holes in this theory, and I would love to hear what you guys have to say. And really, this is just where I'm at. Like I said, I'm believing this now. I have more faith in the yen, I'll tell you that much. But tomorrow's going to be confusing, but it is so parallel to like 2019 and other times, just reverse. I feel like I had to go ahead and do this. So let me know any counter arguments, but here's what I'm saying. If Powell goes ahead with the 75 basis point hike, that will be the first rate hike of that nature in 40 years. And based on that, I think that will freak out the market simply because it will be Powell changing the plan. I said this today, and a lot of people are saying if it's going to be bullish, I mean, people might like it because they're like, yeah, that's going to stop inflation. But again, everybody is aware of this. Powell said it very clearly that they took this off the table, and if they bring it back and they're like, yeah, everybody expected this after only 48 hours, when even last week this was a 0 chance, a 3% chance probability, I'm not really buying it. So I think people will get negative about that. They will take his aggressiveness as being somewhat negative, and I think the market might get spooked that, oh crap, inflation is going to get worse, or at the very least, any other data point that comes out, Powell will be liable to flip the script within 24 hours. That is not good. That is very, very worrisome. And based on that, I think the bond yields will go higher no matter what. So that's why I'm thinking bond yields will go higher if he does 75. Now let's go. What if he hikes 50 instead of 75? Well, he will break the 50-year trend of not following the Fed futures. That would be a market upset in and of itself. Market will lose confidence in the fact that we'll be able to even believe him on that. Not to mention just what it says about their plan where inflation's going. He's like, nah, we're still slow. It's transitory. Is it transitory? I don't know. I'm confused. But if that happens, simply put, the yields will continue to go higher as people will start to price in more and more and more to kind of bully Powell a little bit, the bond vigilantes, and kind of highlight the lack of confidence of where they think the policy will actually end up. That's why people start to buy and sell bonds. And now Powell getting bullied. This is why I'm saying this is so important, because this whole first and 40 or first and 50, this did not exist last week, ladies and gentlemen. All of a sudden, based on a Wall Street Journal post and a couple of other things, the Fed market starts moving into this. This has put Powell into a position he did not want to be in, and either way, like I said, it's probably going to end up worse. So my conclusion with all this, TLT and Shy, I think it's going to go down a little bit more no matter what. I don't know the scale, and just like we saw in 2019, it may even delay by a week or two and then go up. But I think a week in this case, again, you have a big options expiration on Friday, and after that, then we'll really see the market free up and where things are going to be going from there. So that's my thesis with all this. Again, let me know your counters. Let me know if you agree, but pretty much I think Powell is going to have a very hard decision. Again, what you're going to hear at the press conference, he's going to probably have to answer some of the most difficult questions that are just going to sound hawkish by nature. So all eyes are going to be on this. We're going to get a lot of sensitivity. And if I can remind you, the move that you see right when the release comes out will not be the move after the press conference, and where you end up by the end of the day will not reflect where it's going to end the next day or where we're going to open up the next week. Again, you have seen this so many times this year. We're in the middle of peak volatility, so be careful with the quick emotions or quick decisions, more or less. But that's what I have for it. I hope this helps. I hope you guys are ready for it. And I really think we're going to see history and see first and 40 or first and 50. So I hope you're ready, ladies and gentlemen. But as far as the plays, I got 3 good ones for you here today. I'm going to start with the plays and then we'll go over what I did. Number 1 is the yen. Remember, I shorted this yesterday, and this is just an idea to get it. Remember, we've been talking about it. It has been hard to play the yen. If you played the options, you might have made, I think, like 50% today. I shorted the future. I made $1,000 from yesterday. So that's why I like about it. Higher risk, but the premiums aren't as difficult. So be careful with these plays. But this is all you got to understand. If the dollar goes up tomorrow, the yen is going to get clapped. We saw that the last couple days. Even today, the yen ended at another 25-year or 20-year low. Next level, I mean, we'll see where it goes from there. But the bigger the rate hike, the stronger the dollar, then the bigger the move on the yen. That is what's going to happen tomorrow. So keep your eyes out for it. And again, to remind everybody, people are saying the best way to play it, you could go for FXY, you could go for YSC. I would wait until there's a bounce and the premiums die down. You've seen the EWGs, you've seen all these good plays, and the assets move, but if you don't get a good price on the contract, they are not going to pay you, okay? And you've seen it now. There's no surprise about it anymore, so you got to watch out for that. If anything, I would start paper trade in the future so you could get a handle on it, or you wait till those come out, maybe even use spreads, debit spreads, even a credit spread to take advantage of some of the premium. But this is the big key you got to know for the yen. If there is going to be a big signal, it's one thing to play the move between now and when it pops off really big, but after the yen pops off, that is going to be a leading indicator. And once that goes crazy, you know, easy short on the market, and that is your real play right there. So that's the first one. See how it plays out tomorrow. Second play, going to be UNG. I made a play today. Again, they dropped like 16%. I went with the gas future. I did a micro or a mini, so be careful. That was even, I mean, the leverage on, I was down like $1,000 in like 5 minutes. It was absolutely crazy. So be careful. UNG, if the premiums come down, they could be good. But why I'm liking it, it's a big drop. We saw a couple of drops last week and it recovered good, and that's what I kind of liked. But at the same time that our gas is plummeting, the UK natural gas was spiking 20%. So I like it. It's an external situation. Again, that explosion in Texas, that is what is affecting UNG. But I think it could be good, and then they might line up with the rest rest of energy, and we might watch a broader energy bounce if they all start to come down a little bit and then move again. So watch out for that. And then finally, Tesla, baby. I just got a Powell put play. That's it. I wanted volatility. They were up. They had meat on the bone. Options seemed a little bit better priced than like a SPY, so I grabbed a June 24th, I think a 480 call, or a put, excuse me. I spent $190 for it. We'll see what happens with it. Again, just for the volatility and the sake of that, we will see what happens. But those were the only other plays. I did get 500 shares of KAVL today. They had a deal with Philip Morris for distribution in one of their e-cigarettes. I thought it was good. I thought if the market was going to go down, you would get hype on some of those momentum plays. Bought it at like 250. It came down to like 240 or 212 at one point. So down a little bit, not too much. Still riding that one out. Did the natural gas future. We're down only like 200 bucks on it as of now, but we will see what happens coming into tomorrow. Then I did a daily or a June 17th SPX 3200 put. I bought it for $80, and literally the scanner showed up with all of these daily option put plays, and like it outpaced like 9-1. So I said, all right, let me get one. I know I'm getting a little crazy, but trying to keep it small. 90 bucks here, 100 more. The futures plays are all way bigger, so keep that in mind. But did that one, and then holding out this shy, and I think that was pretty much it, and riding those out into tomorrow. And now we talked about TLT. I'm telling you about bonds. Again, the premiums on shy are already up. I have an old TLT that is up from the beginning of the year, which is wild to think about because that means TLT has finally moved down enough and these premiums are absolutely through the roof. People are pricing this in, so it's not going to be a cheap play. Keep that in mind, but still riding those. Dow future, NASDAQ, oil, everything else. We're going to see what happens tomorrow. If we are able to react and digest, I will make a couple of trades on the fly, so hopefully I see you there, but tomorrow's going to be history. I hope you're ready, and just get ready, baby. First and 40 or first and 50. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, it's not about your time. What's going to happen is going to happen. Don't fight the universe. Let it come to you. It's game time, baby. You've been prepared and you're ready. Chad, you better get a good sleep. Go get a good workout in. Relax a little bit, but get ready. Be calm. Don't force it, and remember, tomorrow's the turn. It is not the river. Oh my gosh. Oh my. So I love you, Chad. Have a wonderful day. Good night. I'll see you on the stream, and bye.